Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's March 15th, or I'm sorry, April 15th. This is about our chart lesson for the day. I'm trying to back us up a month there, but it's April 15th. Couple of things before we get into the chart lesson. It won't be as long today as I don't have as long a list of items as I have had on a few of the previous videos, but a few things I want to talk about before I talk about the trades is that first of all, just following up on what we talked about yesterday about your charts and all. As long as you've got a good charting service and you got good data, if your chart doesn't look just like mine or whatever, don't worry too much about it. I actually got a couple of emails from some other traders that actually use NinjaTrader, the same software as me, and they actually use the same data provider as well, although they're using a different broker. And a couple of them had a second entry there where I had a fourth entry on that chart, if you remember us talking about it. I'm not going to go back and pull that up if I could see it again. Actually, I've reloaded my data, so my chart's probably changed anyway. But anyway, if you remember us talking about the Thinkorswim, and really the way I want to leave that is if you're just taking a few trades here and there, if you're sim trading, you're probably okay on Thinkorswim. But if you're going to do this professionally, get a good software and a good data provider, and that's the way I'm going to leave it. So I think you would be wise. I think my main point was you just can't skimp on your tools. Trading is hard enough as it is, but if somebody's got an advantage of you because your charting data is not good or your charting service is not good, it's just going to hold you back. So anyway, enough about that. Let me look at my list here. Trend lines. I want to talk about trend lines. Just to make sure everybody understands your trend line, first of all, always start your trend lines. Only use the data within today's price action. In other words, it may be hard to see, but there's a line running right up through here. It's real faint. But that is the cutoff from yesterday afternoon when we closed to when we open back up. And this, of course, all this in the blue is the overnight session. So yeah, even though your swing high is really over here, this is where you're going to start because this is inside today's. Don't ignore this stuff over here. Even if you had a swing up here just above that, still start here. And you can see how that works out for the day. So always start, remember your trend line always starts from the high or low point. So notice I started from the high and then you move through the first swing. Obviously there's another shorter term one here because that would be the first few swings. So there's a shorter term trend line right there, but that's in the overnight. We're not interested in that, but this channel was still playing out when it was time when we were trading today. So we need the bigger one. So hopefully that makes sense, but this was the bigger channel and that's the first two swings. We always start at the high if we're drawing that off the highs, and we start at the low like right here if we're starting off the lows. And when you go through the first swing, I usually use the bodies of the candles, not the stems. That's the only time we care about the bodies. And I don't know why, but it just seems like they're more accurate that way. 99, probably 95% of the time, you're going to get the most accurate read doing that. Occasionally, it may be off the somewhere else off the top of the stems or whatever, but most of the time I'm going to draw it just like that. And you could see I could have drawn that at what time is that bar right there? That was at 23:55. So that was just before midnight last night. I could have drawn that trend line off that eye and across those closes at midnight last night and walk in here at 7 o'clock this morning and find that trade or find that pull back to the trend line. So, people will try to tell you can't find, you can't draw your trend lines in advance. You're drawing them at the end of the day, but you can see how easy that would be. Same thing here. I drew this one off the low and through the body. I used the close because it was coming down, But I drew it off the body right there, and guess what? That gave me that trend line all the way up. I never had to adjust it, never had to move it. And if you'll draw them that way, 90% of the time you'll get them right, and you won't have to adjust them or anything. And here's another shorter term one I don't have on here, but notice that one. If I draw it right across those closes, those bodies, look how it holds all the way down. This one was a little bit harder, but still it worked the same. I just drew it off those first couple of swings. Actually, it really, if you make it a little bigger, it really wasn't that hard. Actually, I'm not quite on there. Let me get on it. And then let's adjust it. And if you draw it right off those two closes, so you can see that trend line right there, and that would have, once again, been a perfect trend line all the way down. So I hope that's clear, because we're getting a lot of people that are, actually I want to put that back on there. You're getting a lot of people that are, you know, they're starting in the next day, or they're just starting somewhere in the middle. You always start from the swing high, the highest point. Working up here, we'd start from the lowest point, and we'd go right through the first swing, and there's that trend line. And if you copy it and drag it over, you see how well the price action fits in there. Every time it touches this line, it turns up. Every time it touches that line, it turns down. And you can see that back and forth all the way. Look how well that fits. That's what you want your channels to look like. Can draw another one right here. Just draw it down. There it is. Notice you get a break in U low and it turns up. So even the short term ones will play out a lot of times, just like the regular ones. Put the other side of this one on here, just like so. So I hope that's helpful on the trend lines and get some of you onto the right track, because people send me their trend lines and they're literally all over the place. So, and if you look here, there's actually a midline on that little channel right there, and you can see that. And somebody asked me why I have that middle line in there. Well, notice there's oftentimes two tiers of these channels. Don't ask me why. I can't tell you why. I just know they're there, and I know how to find them, and I know they're important, and they're important. So the market tends to, there's a thing called market geometry, and you get these equal and opposite moves. It's almost like the laws of physics even work to some degree in charting. You get these equal and opposite moves. That's the reason the market moves in twos, and you get measured legs and all that good stuff. So if you remembered yesterday, I showed you the daily chart, and I showed you that we were getting to an important point where we were probably going to sell off again. And lo and behold, we come in this morning and we've sold off pretty strongly. We sold off so strongly, as a matter of fact, we just kind of went sideways the rest of the day. So, you know, whether or not it'll hold through and we'll get a complete measured move down off that daily chart I showed you yesterday, we don't know yet. It's still too early, but it sure looks like it's playing out. So anyway, it didn't surprise me too much when I came in this morning. We were selling off. So, and the other thing I want to talk about was when you enter your trades, you have to enter on time. Your signal bar is always the lowest bar in the swing or the highest bar in the swing. I'm not saying these are trades we want to take, but if you're going long here, it has to be the lowest bar in the swing. If you're going short here, it has to be the highest bar in the swing. You can't, if you take any other bar coming down, you're too late. And a lot of times you will have a losing trade just because you're too late. So that is your signal bar. That is your signal bar. That would be the signal bar. Up here, somebody actually sent me the red one's not the highest bar, the green one is. That's your signal bar, so there's not a good trade set up there. You don't want to use that inside bar in most cases. They're not reliable. Um, this is the highest bar in this swing, so there's no short right there, even though that's off a major trend line. You had to wait for a lower high. Um, that would be your signal bar if going long. There's your signal bar going long. That would be your one going short. There's one going long. It's always the highest or lowest bar in the swing. You can't use any other bar. If you do, you're not following the rules, and you're going to have losers, and you're going to wonder why you're losing. I'm going to show you a chart here, and the only reason I'm showing his chart is because he's the one that was asking me about this, and maybe this will be helpful to him. So I'm not picking on him, but I just want him to see where he's going wrong. So this trade, there's his signal bar, and you would go short one tick below that, and he entered properly on this one, so that was good. Then notice he's got another trade here where there's his signal bar, which is mostly bearish. I probably wouldn't be afraid to take that trade right there. But notice what he does. He uses this for his signal bar, and he enters one tick below it. Well, he's a whole bar late. Let me see if I can make this a little bigger. The only way you can enter this is on a sell stop, one tick below that bar right there. Your sell stop right there, and it would have got triggered, and he would have been out way before here. Even though this still worked, he got lucky this time. So this is your signal bar right here, and he bought right here, and I guess he got stopped out on his. See, if he'd have had his if he'd have entered where he was supposed to, his break even. Well, he still would have got stopped out on break even before it went lower. But then he has another trade over here. Right here. He went short. This is your signal bar, which is bullish. Notice there's a new low and a first entry, and there is a second entry short right there. But I guess what he was thinking maybe was, well, that's too bullish, but then the next one's bearish, so I'll use it. Well, you can't do that. This is your signal bar, and you would not have been able to enter this trade, and that would have kept him from having a loser. Actually, if you'd have entered here, even with the wrong signal bar, you still would have had a winning trade. But by entering way down here, he's actually entering right into the lows, which is not good anyway. And he's entering on the wrong bar. He's entering a whole bar late, and most of the move has already happened. So you can't enter too late. Then he takes a full stop right there. So hopefully that's clear. You have to enter at the right place, and you want your signal bar to be a good one. But anyway, for that trader, hopefully that helps clarify that for you. The other thing is, most of all your entries, let me show you something. Where do all these big moves transfer? Where's the first big move of the overnight? Right here. Where did that start at? Off this key entry point, that trend line. And look at that move down. Then it kind of works sideways to back up. And where's the next big move down? Right off that trend line, a key entry point. Where did this fairly decent move happen? Off that shorter term trend line, key entry point. Where did this big bounce start at? Off this key entry point. Of course, that would have just set it up for you, but it's still where it transpired. But look, coming over here, where does the next big down move start? Right here. Where is that? Off that key entry point, the trend line. Where does the next one happen? Same place. You actually got to close outside, so you got to break now. But that's where the next big move happened. Oops. Get that back where it goes. All right. Then we started going sideways. So where did the big moves come from? Look at this big move. Look at this big move up down here. Where did it come from? Off this horizontal support, key entry point. Where did the next big move down come from? Off the upper resistance of the range, the key entry point. Where's the next long? The key entry point. Where's the next short? The key entry point. Where's the next big move? Key entry point. This one keeps going, but where's the very next one? Once again, it's up here at a key entry point. If you measured this range and look for a measured move, it's probably going to give you the upper part of the range. So where's that big move come from? Key entry point. And it comes back. And where does the next big move come from? This former resistance is now kind of a midline, key entry point, boom, and off it goes again. And you see this over and over. And then once it gets up here to the highs, it actually pushed out and had a little failed breakout. But still, where did your next big down move come from? Up here off this key entry point, boom. So is that starting to ring a bell for you? Key entry point, key entry. Write that down. Tape it to your monitor, right in front of your chart. Key entry points. I show these to you every day, and I'll come in here and people are entering just all over the place, and then wondering why they're having problems. All your good entries are going to be at the key entry points. Occasionally there will be moves that go without you because you don't get a good setup, or that just happen because of some oddity. But I just showed you where every move came from today, and every one of them was off a key entry point. And these were not, and I showed you early, here's the real kicker. I just showed you how you could find this trend line at midnight last night. At midnight. And you come in here a little before 7, you would have had this here, and you would have just been waiting on prices to come back here. And then all you had to do was get a setup. And if you catch one of these trades, this last one, and I'll explain it to you in a minute, you catch a runner and you ride that all the way down. That would have been an easy runner, and that's a long move down with no real correction. So that's an easy one to ride all the way down. And it starts way up here at 27.90, and you can ride that all the way to 27, let's just say 60. That's 30 points. If you just got one single runner, that's 30 points plus whatever your scalp was. Let's just say you were scalping you just run it, you did a scalping run with 2 contracts. Well, you made 1 point on your scalp and you made 30 on your runner. So you made 31 points off one trade. And if you're only trading singles, you're probably done for the day. So that's the beauty of this, and that's where you want to get to be, where you're done within the first hour or two every morning. And I can show you trades like this every morning where you're done before 9 o'clock if you're just patient and wait on the key entry points and take them when you get the setups. And then you're done and over with. You don't have to sit here all day and chase trades like most people do. And most people are the whole way down here, they're scanning for entries. And sure, if you did get a nice key entry, this shorter term key entry point that's running kind of congruently with the EMA there, sure, if you got a second entry short and a good setup, by all means, you could take that too, or add on or whatever. So, but most people would be chasing this thing all the way down, and most of them end up getting short right down here. And then it fails on them, and they wonder, well, they're getting all the way down. They want to get short, but they talk themselves out of it. And finally they say, well, if I get another chance, by golly, I'm jumping in, and that's down here. And then it reverses on them. And I guarantee there's somebody listening that did exactly that. And how do I know that? Because I was a new trader one time too, and that's exactly the kind of stupid things I did. Because common sense says, hey, wait till you see it moving down and then try to get in. But you can throw common sense out the window when it comes to day trading. You almost have to be a contrarian. So you find out that, hey, I got to wait till it corrects and comes back up here to the key entry point that most traders don't even know that's there. They have no idea what I'm talking about with key entry points. Some of y'all listening today have no idea what I mean when I say key entry points. But where did I just show you all the big moves came from? There was nothing magical about what I just showed you. It was easy to, this trend line was easy to find. This secondary one where it flattened out, was easy to find. I showed you how to draw it off the very high and through the first swing. And then when it gets the third touch right here, it confirms it. If it turns on, if it pushes on through, then it's not confirmed. But if it touches it and turns down, and then it's confirmed. Just like right here, when you drew it off these first two, it got confirmed right here. So when it was coming back right here, if I get a setup, I'm going short because I know I got a confirmed trend channel working down here. Key entry point. Key entry point. Write that down. Stick it to your forehead. Stick it to your screen, whatever. Don't enter until it, when you're learning, you shouldn't even enter if it's not a key entry point because you're just going to probably screw up. So wait on those key entry points. Again, what are key entry points? Key entry point is just important support and resistance. These trend lines are just slanted support and resistance. That's all they are. So your trend lines, your horizontal, and when it goes horizontal, you switch to range rules. So when it's a trend line and trending, you're looking for second entries and entries off the key entry points. And when you get a two-legged correction back to a key entry point and a good setup, that's as good as it gets. Take it. And then again, the key entry points are the trend lines, which are just slanted support and resistance. The horizontal range support and resistance, especially the ones like right across here that have proved themselves over and over, and the ones, look how many times we proved it all the way across here. You can pretty much count on that. Eventually it's going to fail like it did here, but even if it does, you'll probably get a setup. On this particular case, we never really got a setup, but I circled it because I wanted to talk about it, because if you just sat here and took every trade that came back to here or everyone that came back to here, you still would have had a good day. You might end up with a loser at some point. And then notice what happens when we got up in the upper side. You sell off the measured move that's the same distance, and you buy off the lows down here. You could have been wrong several times and still made money. Or I wouldn't say you would be wrong, but you could have just picked these trades even though they're not good setups and still done okay. So I hope that's clear. Key entry points. Write it down. Stick it somewhere so you don't forget it. Well, let's talk about some trades here now. I'll try to do this in 30 minutes today. But I'm going to show you this. This trade right here set up. It actually set up right here too. And this was a repeat pattern. I'm going to show it to you 3 or 4 times today. But notice you got a high, you try to go higher once, you try to go higher twice, and it fails and turns down, and look at it go. Right off the key entry point. Imagine that. Then look, comes back right here. This was right at 7 o'clock this morning. So just when I'm getting ready to trade, notice that little trend line working up. And it gets to the key entry point, but because of that trend line working up and the fact that that's not a second entry short, I'm not going to take it. Technically, you could count that as a second entry because look at that low, it runs up and you get a first entry and then it runs up. So when it breaks lower, so really you could actually almost say that's well, it is a second entry, but the problem is this is your signal bar and it made the high and it's bullish. So this is just an inside bar. So it's not reliable. Plus you don't have a break of your trend line yet. So I'm a little hesitant to take that one. So I'm going to be patient. Even though it's a key entry point, it's not the perfect setup. Even if you'd have took it, you'd have been all right. But it's not the perfect setup. So I'm going to wait for a better setup. So then I get a first entry long. And then I get a second entry long, but I know I'm not going long. We're in a downtrend and we're right into the trend line. I'm expecting this to maybe fail. If it does, I'm going to have a sell. When it broke high right there, I put a sell stop right there and I just wait and see. And guess what? When it goes 1 or 2 ticks and then turns and rockets straight down, you've trapped all the people that don't know what the heck they're doing that went long right there. Never go long in a downtrend, especially not at the high of the correction. And you'd be shocked how many people probably went long right there and got trapped. And you know it's a trap because look how it rockets down real fast before it starts undulating like more normal. Still dropping pretty steeply right there, but that's because it's a downtrend. But that's a failed second entry long. And normally I hadn't been talking about these kind of trades, but I wanted to show you how easy this is. Just wait. Just wait until you get that failed second entry. It's counter trend second entry. We're not looking to go long. We know better. So, but when it broke higher right there and didn't take off, put your sell stop right there and look. And that one trade, you'd made 30 points and been done. Easy 30 points. And it took, you'd have been in that trade at around 707. And even if you'd have wrote it down to the very bottom, you'd have been out. Well, that's almost an hour. That's longer than I thought it was. But you wouldn't have, you're not ever going to get all of it. And don't be mad at you. If you got out right in here, you still got a good bit of that trade. So don't be mad at yourself. But in 1 hour, you could have taken one trade and made 30-something points with just trading singles. So then it corrects. And we never really get, if you got a good second entry on the way back up here, you might take this trade going back to this trend line. Because that's a long trend. That's a long way back up there. I mean, from 27.55 all the way back to almost 80. So that's 35 points. So that's even though it doesn't look like a big trend, that's a long way up. So that's big enough where you might trade that back up, especially now that we're flattening out. So if you got a good second entry off that key entry point, yeah, you might take it. But you're going to want to, I mean, even if you just took the key entry point, you drew it off those first two, look what happened. You got a signal bar. It would have been an easy trade. Here comes another one. Even though that's, by the way we count, that's not a second entry, can you see the two legs back? I didn't mark it because it's not a second entry and I don't want to confuse a lot of people, but that's still two legs back. And that's the first break of the trend line, and we're not back up here yet. You could take that trade. I'll mark it as aggressive. Anything green is aggressive. If you've already made your 30 points on this easy one, you're not going to want to take this trade. But if you didn't catch one of these early ones and you're just sitting here and you haven't had a trade yet, you may take that trade. But you'd be much better off to wait till it gets back to this key entry point because it's a bigger key entry point than this one. So, and then it comes back up here. You got your, and now notice this, you got your break of this trend line and a new high. So we've met all the criteria for this thing to reverse when it gets back to this key entry point. Gets back right there and it makes a lower high right there, and that's a second entry short because that's a new swing low. So first entry, second entry, I mean that's like somebody tossing you a softball. Boom, off it goes. And if you didn't catch that one, or if you got stopped out on your runner on that one, guess what? You get that repeat pattern again, a failed second entry long. Notice that high, first entry, second, and it only went a tick or two and turned and went right out the other side. Have your sell stop right there and boom. So easy. If you just know how to find the line and you know how to be patient and wait on the setup, it really is easy. I say that, but it's the hardest thing in the world to learn because I don't know why, but it is. I'm showing you how easy it is, but people will make it a lot harder than it is. But anyway, we're coming on, we've moved down here and guess where we bounce? Right off the midline. And we're kind of working back up. We're just kind of chopping sideways. The market's still pretty weak yet. The corrections aren't even going up really. They're just chopping sideways. So there's a couple of longs you could have taken in here, but I wouldn't take them. Just wait till you get back to this key entry point and look for a short. And guess what? We come back and we actually get a little break here. But we've been trending down. This is a downtrend, and look, you got a double bottom here. So that's a new low. First entry, second entry, a second entry short with a huge bearish bar at the key entry point, and it actually made a double top on top of that. And look at it go, boom. And if you didn't feel comfortable yet, guess what? It makes a lower high here. It breaks up, touches the trend line, comes back down, gives you another huge bearish bar. Gives you a second chance. But just in case you didn't see that one, guess what it does again? It gives you that repeat pattern of a failed second entry long. And so when it broke lower right there, have your sell stop, and boom, off it goes. Now I will say, notice how many times we bounced at that price. There's strong support there, so you do need room to get out right here between where you enter in here, or you wouldn't want to take this trade. These other two, there's not much problem. There's still plenty of room. This one, there's not a lot of room left, so you got to get in it at the right spot. You can't be, even though it wouldn't have mattered, and the fact that this was a repeat pattern, unless it was only, I mean, the only way I wouldn't probably take that trade is if it was right into that line. As long as I had some room here, I'd probably take it, because it'll still probably push on down a little bit, even though if it closes back in there, because we just came off the key entry point. So then we just start. So I measured this and got an equal distance down here, and so we're in the lower half of this now. And guess what? You got a new key entry point setting up here, maybe if it starts turning down off of it, but you definitely got one down here too. You really couldn't get in these without much room back into that midline, but when it came back here and made a lower high, this is basically a double bottom. It's not exact, but it's so close you can call that a double bottom. And notice what, first entry, and guess what we're back to? The main key entry point plus the midline bearish bar, and you get a second entry short right off the key entry point. And notice what happens when you get to that support this time. It just like it did over here, because it came off that key entry point, it still pushes through. Even though it fails, it gets right on through there. But notice it does fail. And I mark that as an aggressive one going back the other way, because it's going to be a failed breakout probably. And we did have a break, and now we've got a new low in place. Plus you got that strong support that it fails. But notice you got a new swing high right there. It's higher than that one. So first entry. That's a second entry long, and look how far away we are from the EMA. Now this is an inside bar, but it makes it equal low, so you can count that as your signal bar. Now if that was not an equal low, I wouldn't count. Actually, it might even be a tick lower, but it's at least an equal low. And so you can count that as your signal bar, and boom, you got plenty of room back to the EMA. And you really got enough room, really almost to right there. And it takes off, and we're just back in the range again. But we had the close outside the main trend line and a new low. So this trend might be over. Wouldn't surprise me if we correct here and go sideways. And that's what happens. So now where are your key entry points? There are these lows right here of this support and across these highs. And I didn't mark them all. I just marked some of them. But if you'd have taken just about any one of them, you'd have had a good trade. But notice where the big move comes. Up, down, up, up, down, up, down. Just wait on the key entry point. You don't even have to read it good. I mean, notice there's no good signal bars, no good setup, and if you went short, you'd still had a good trade. Same thing here. You could probably argue for that trade. It's all one move up, so it's just a first entry. And then you had a lower high here. I didn't mark it either because it was almost right back into the EMA. But honestly, you could argue for either one of them to be at least aggressive greens. I'll go ahead and mark them. I wouldn't be afraid to take either one of them if I had been sitting a while waiting to take a trade. They're aggressive, but a lot of times these aggressive ones pay off. Like this one right here, I'm going to take that one every time. I talk about these failed break lowers that turn out to be important lows, or when it breaks higher, it turns out to be an important high. Sometimes the market will rocket off from those places, because what they do is they run down here, and if you go look at most trading information, they teach you to go short down here. Just the opposite of what you need to be doing. So all these dummies that read these books and go to trading forums and they read these strategies that say go short if it breaks out the low of a range, they're all getting short here. And the smart people that know, like me and you, we know to do just the opposite, and we take all their money. Remember, for every dollar you make, somebody's got to lose a dollar. So you got to outsmart people. So you're not going to outsmart the 10% of professional traders that know this stuff. You're going to outsmart the other 90% and get some of their money. And that's, I mean, 10% of the traders take all the money because they're the only ones that know what the heck they're doing. The rest of them are wannabe people that watch a video that says it's easy to make $500 and they believe that crap because you can make it look easy all day long. I just showed you how easy it is. But when you try to do it yourself, it's not that easy because you don't have the experience to find this stuff. But you can get it. You can learn it. So we run up, we run back down. And notice what happens here. You got a new swing high. It's higher than that swing high. You're running down first entry. Actually, I miscounted that one. There's a second entry right there. But that's still 2 legs down, and it's still a double test. So it's still a good trade, even though it's not really a second entry. But you can see that looks like 2 swings down. Doesn't matter. Long way away from the EMA. That's a gimme. Then it gives you a second chance to do the same thing again. And this time I mean, if you catch that one trade, and you'd catch a runner right there. You wouldn't have got stopped out on your runner on that one. And you ride it all the way, and I'd have me a sell stop, maybe a point in front of that, and I'd exit right here, and I'd get almost that whole move. And then I'd reverse and take it all the way back down, might even add on right there and do the same thing, and I'd want to get out right about here, and boom, you get that whole move. And you can see you could have entered anywhere across here, even though I didn't mark them. They're not the greatest setups because we know prices are going to bounce. Eventually, something will fail. But if you just wait on a good signal bar, if you'd waited on any good signal bar here, like right here, you get a little double bottom and a little trap right there, and it turns back up. It actually tries to come back again, and it would have eventually taken out the break evens, but you would have had an easy scalp out of that. Even this old bearish bar would have been a winning trade. Then you get a nice higher low, and look at it go. I didn't mark these because the bars are so big that they're back into the middle, but these are big ranges, so you probably be all right with them. I marked this one because notice you got another bearish bar. You could have went short right there, but you don't have a break of this. You probably want to wait on your lower high. Notice that lower high. If you'd have went short there, you probably would have had enough to scalp out on a 4-tick scalp, but that's a fairly big bar, so you probably would have been using the 8-tick rule, expansion rule that we put in place, so you probably would have been trying to get more than 4 ticks, so you may have got stopped out on that one. But there's a way to know not to jump in this one, because notice how you got 1, 2, 3, 4 bars stacked up side by side, and your trend line's still working up. It's not a good sign. It should have jumped on down. So that gives you enough reason not to get in there, and that's the reason I circled that, just to show that to you. And then notice you come back and you test the upper side once, you make a higher, you come back and you test it twice, and you got a second entry long right there. And look, you ride it all the way back up. You probably wouldn't have got a runner here because it did come back and take your second. Well, actually, I take that back. It depends on how you manage your runners. If you're moving your stop to break even, you're not going to get a runner here. But you could enter that as a high or low and ride it all the way up, and you would have got a runner on that one. So, I mean, that one, I'll at least mark that one aggressive. But you do have some bars stacking up and so forth. And the reason is because of that midline right there. You got this bigger channel. And notice here, this is one of those where it wouldn't have drawn off the clutch. Actually, your shorter term one drew, just like I taught earlier, but this one didn't. And you really wouldn't have found this. The way I got this line was I drew it off these highs and then drug it down. So it didn't really help me till it came back here. Then notice you got your little trend line working down. And it comes back. And where does it come back to? Even right here, you could have went long and got an easy scalp out of it. And notice too, you got a second entry short that I marked right there. New low, first entry, second. And you're looking for prices to come back to here. If nothing else, to come back and maybe test this one more time. And we come back, and guess what? You're coming down through here, and you get a setup right here. It's not really a second entry. Really, you could count that as a double top. So first entry, second entry. But notice you don't have a good signal bar. And that's the reason I circled it, just to show you. But it's a double test and everything else. If you'd have got a good signal bar, I'd have gone along there. And look, and that's a key entry point from this coming across here and coming up here. And so you got them, you got a confluence right there of two different support areas. And look at it take off. Key entry point. Stamp that on your forehead. You actually get a higher low right here. I didn't mark it because you're going along right into, you got a lot of congestion. Look at all that. And at least one of them's a doji. That's congestion. And notice how it does pull, it does acts just like a range. It breaks out and fails and comes back. It ends up taking off, but it still fails first. So you got to be careful entering in those. We run on up. I didn't really mark any more trades today. Really, you got a double top right here. So first entry, second entry right there. And there's another. It's right here at this line. So it's a little questionable about, but there's also congestion there. So it's probably going to be a failed breakout. So there's another. And I didn't even mark that one. You can at least mark it green. I mean, but you really could mark that. You could mark that one blue. So we're 40 minutes here. I hope this was a good lesson for you. I hope if you didn't get anything else out of this, you got key entry point. Like I said, write it on your forehead. Look in the mirror every morning. Stick it to your computer. I showed you how to find them. It makes it so much easier than just chasing all over the place looking for trades. Find these key entry points and lay there and wait on them like a predator. King of the jungle. You're the smart guy. You're the smart one. You're not chasing trades and taking everything that looks like it might be a setup. You know where the setups are going to happen. And you're sitting there and you're waiting on all these other unsuspected people that don't have a clue what they're doing that are donators. And you're going to let them donate you a little money. And you do that once or twice a day. And before long, you got a big pot full of money. And you can do it right from your own home, sitting in front of a screen in your underwear or your pajamas or your tux or whatever you like to wear every day. So anyway, we're going to wrap it up. I'll be back again tomorrow to wrap up the week. I'm done for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.